Before you buy your next ounce of silver, before you watch another video telling you silver is the safest investment in the world, you need to hear this, because what I'm about to say is going to make a lot of people uncomfortable. Silver is not as safe as you think. In fact, if you don't understand what you're doing, silver can be one of the most frustrating, volatile, and misunderstood investments you'll ever own, and no one is telling you the full story. Not the influencers, not the hype channels, not even some of the so-called experts, because the truth doesn't sell as well as hype. Welcome back to John Forecast. On this channel, we don't chase hype, we break it down. We talk about real markets, real risks, and real strategies. And today, we're going to unpack one of the biggest myths in investing. That silver is a safe haven asset. By the end of this video, you're going to understand not just when silver works, but more importantly when it doesn't. And that difference, that's what separates smart investors from everyone else. Where the safe narrative comes from, let's start with why people believe silver is safe in the first place. Because this idea didn't come out of nowhere. For thousands of years, silver has been used as money, real money. Long before digital currencies, long before central banks, silver was used in everyday transactions. It held value, it was trusted, it was tangible. And even today, silver still carries that legacy. You can hold it, you can store it, you can pass it down. That gives people a sense of security. And on top of that, silver is often grouped with gold, and gold is widely considered a safe haven. So naturally, people assume if gold is safe, silver must be safe too. But this is where the misunderstanding begins, because silver is not gold, and the difference between the two matters more than most people realize. The volatility nobody talks about. Let me tell you something most silver promoters won't say clearly. Silver is volatile, very volatile, much more volatile than gold, and that volatility can work against you. Imagine this. You buy silver at what feels like a good price. You feel confident. You feel smart. Maybe you even tell yourself you're protecting your wealth. Then suddenly, the price drops. Not a little. 10%, 15%, sometimes even 20% in a short period of time. And now you're stuck, watching, waiting, questioning your decision. The double identity problem. Silver has a split personality. On one side, it's a store of value. On the other, it's an industrial metal used in solar panels, electronics, electric vehicles, medical applications work. That means silver's price depends on two completely different forces, economic fear and economic growth. And here's the problem. Those two forces don't always move in the same direction. When the economy slows down, industrial demand drops, factories produce less, manufacturing slows, and silver demand from industry falls. That puts downward pressure on price. But at the same time, investors might be buying silver as a hedge, trying to protect themselves. So what happens? The signals conflict, and instead of behaving like a stable safe haven, silver becomes unpredictable. When silver fails to protect you, now this is where things get uncomfortable, because this is the part most people don't want to hear. There are times when silver does not protect you. Think about market crashes. You would expect silver to go up, right? A safe haven should rise when everything else falls. But that's not always what happens. In many market stress events, silver drops along with stocks. Why? Because in a crisis, liquidity matters. People sell what they can, not just what they want. Silver becomes a source of cash, and that selling pressure drives prices down. So instead of protecting you, silver temporarily becomes part of the problem. And if you weren't prepared for that, it feels like betrayal. If this is changing how you think about silver, take a second, hit the like button, subscribe to the channel, because this is exactly what we do here. We cut through the noise and show you what actually matters. Now let's go deeper. The premium trap. Here's another reality most people don't fully understand. When you buy physical silver, you're not just buying silver, you're paying a premium. That premium can be $5, $10, sometimes even more, depending on the product and the market. So let's say silver is $30. You might actually be paying $35, $40, or higher. Now here's the problem. When you go to sell, you don't always get that premium back. And in some cases, you lose it completely. So even if silver price stays the same, you can still lose money. This is one of the biggest shocks for new investors, because they think silver didn't go down, so I'm fine. But in reality, they're still at a loss. So let's pause here, because we've already uncovered some uncomfortable truths. Silver is volatile. It doesn't always act like a safe haven. It can drop during crises. And premiums can quietly eat into your returns. But here's the thing. This doesn't mean silver is a bad investment. Not at all. It just means you need to understand how it really works. The biggest myth that traps investors. There's one idea, one sentence, that has trapped more silver investors than almost anything else. You've probably heard it. Maybe you've even said it yourself. Silver is cheap, so it has to go up. It sounds logical. It feels obvious. But markets don't reward what feels obvious. They reward timing, structure, and patience. Because here's the uncomfortable truth. Something can stay cheap for a very long time. Years. Sometimes even decades. Think about that for a second. You could buy silver today and be right about the long-term story, but still see nothing happen for years. No breakout. No explosive move. No validation. Just sideways movement, frustration, and doubt. And that's where most investors break. Not because they were wrong, but because they couldn't wait. The emotional cycle of silver investors. Let me walk you through something that happens over and over again. A pattern, a cycle. It starts with excitement. You hear about silver, you see the potential. Maybe you hear price predictions, big numbers, and big opportunities, and you think, this is it. So you buy. You feel confident. You feel early. Then time passes. Nothing happens. Or worse, the price drops. Now confusion starts. You begin questioning if you made a mistake or if this was the right decision. Then comes frustration. You're holding something that isn't moving while other assets are. Stocks are going up, crypto is moving, and your silver just sitting there. And finally, one of two things happens. You either sell too early or hold with doubt. This emotional cycle is real. If you don't understand it, it will control your decisions. Now let's talk about something almost nobody explains properly. Timing. Silver is not a set it and forget it asset in the short term. It moves in long, quiet, frustrating cycles followed by short moves. Most people miss the explosive phase because they got tired during the quiet phase. They exit too soon, or they never enter at all. Some say silver never moves, while others say it exploded. Both are right. It just depends on when you were in the market. Now let's address opportunity cost. When your money is in silver, it's not somewhere else. If silver is flat and others rise, you lose. This is a hard truth for long-term holders. You're missing other opportunities, and over time, that adds up. It's not always the best asset. If this is making you rethink your strategy, that's good. Take a second, hit like, subscribe, and let's keep going. This might change everything. Smart investors don't treat silver like a guaranteed winner. They treat it like a tool. They understand silver is not meant to do everything. They use silver as a hedge, a diversification layer, and a long-term store of value, but not as their entire strategy. That is key. The biggest mistake is going all in. They get emotional and go heavy into silver. Then they feel every move. Every drop feels bigger. Smart investors balance. They position themselves so that if silver moves, they benefit, and if it doesn't, they are still okay. That removes pressure. Silver isn't just about price. It's about psychology, timing, and patience. It's not safe, as most think, but it is powerful, if understood. Now let's flip the perspective. There are moments where silver doesn't just perform, it explodes. But those moments are rare and don't last. Silver moves when multiple forces align. Not just hype, but pressure building beneath the surface. When that pressure releases, the move is fast. It usually starts with monetary pressure. And when confidence in currency falls, inflation rises, and purchasing power feels weaker, attention shifts toward hard assets. Add in industrial demand. Unlike gold, silver is tied to the real world. Solar energy, electric vehicles, and technology infrastructure pull demand higher. Imagine all of this happening at once. Monetary pressure, economic uncertainty, and rising industrial demand. That's the setup when silver starts moving. The silver market is tiny compared to gold or stocks. It doesn't take massive money to move it. When institutional capital flows in, price shocks. Silver doesn't move gradually, it spikes. By the time most investors notice, the move is already underway. Most people miss it. They lose patience in the boring phase and exit. Then they chase the move, buy late, and become exit liquidity for early investors. Silver is not your entire portfolio. It's a layer, a piece of a bigger system. It adds diversification and protection against specific risks. Smart investors build portfolios that perform in different environments. Growth, crisis, inflation, silver fits into that mix, not above it. Stop asking if silver is safe. Start asking when silver makes sense. That question changes everything because now you're thinking like an investor. Silver requires real patience, sometimes years. You will question your decision and see other opportunities. That is where discipline matters. Who is silver for? Someone patient who understands cycles and isn't chasing fast results. It's for people who want tangible assets outside digital systems. Silver is not for everyone. If you're looking for quick gains, trying to flip an asset, or you panic when prices drop, silver will disappoint you. For 2026, think of silver as a long-term position. Keep allocation balanced. Focus on consistency over timing. Gradually build your position step by step. Separate emotion from decisions. Don't get pulled into hype or voices saying silver will explode next month. Reacting emotionally leads to mistakes. Every asset has strengths and weaknesses. Silver is not perfect, but it doesn't need to be. It just needs to play its role correctly. Once you stop expecting it to behave like something it's not, you can use it the right way. Thanks for watching. Stay sharp, stay patient,